Hi, and welcome again to another edition of Market Analysis for today, June 5th of 2024. I am Giovanni Betancourt, analyst, trader, and educator with Vantage Markets, and this is a recording previous to the U.S. session open. Well, a slowdown in the economy, in theory, is exactly the trigger the Federal Reserve needs to start cutting rates. But investors are now trying to decide if the latest data points are good news or bad for stocks. The answer is complicated. Stocks have a knack for finding ways of turning bad economic news into good news. For example, the report yesterday showing fewer job openings for workers, combined with lower estimates of gross domestic product, are bad for the economy. But they are good if they give the Federal Reserve room to lower interest rates, to boost growth later. Hence, shares rose yesterday, but just a little, because no one's quite sure what it means. The bond market had a more significant reaction, with yields on the 2-year and 10-year Treasury both down about 0.2 of a percentage point over the past week. Stock traders take note, the bond market is substantially bigger than stocks, with more liquidity and less volatility. Its judgments are more considered and deemed more notable as an indicator than the parallel universe of stocks, which can jump all over the place, amplified on occasion by social media, as seen with the GameStop and AMC meme stock frenzy. The move in bond yields is almost equivalent to a quarter-point Fed cut being already delivered. Of course, Fed interest rates, inflation, and bonds are intimately related to each other, but their moves aren't always synchronized. Right now, it looks like inflation isn't yet responding much to slower growth. That slower growth, of course, is probably a delayed response to higher Fed rates. The key judgment for stock traders to make now is on the timing of Fed cuts. If inflation stays strong and no cuts come this year, that could push down on growth even further and be damaging to share prices. But for now, the Goldilocks scenario is still possible, that growth and inflation slow just enough to allow the Fed to start cutting without too much pain for company earnings. If that soft landing fairy tale comes true, there's no reason stocks can't keep going higher. If that soft landing fairy tales come true, it will mean a happy ending for inflation and stocks going higher. On the economic point, the US data point of the week, if not the month, comes with Friday's May employment situation report from the Labor Department. The key non-farm payrolls number is seen coming in at up 178,000 versus the April report showing a gain of 175,000. So a monkey wrench could be thrown into a fairy tale if we see a considerable higher number above 178,000. And that fairy tale could most likely be right around the corner if we see a much lower number than 175,000 or 178,000. So keep that in mind. Now, investors and traders are also anticipating on Thursday's European Central Bank meeting. The expectation is that the ECB will get ahead of the central bank pack and cut its main interest rates by 25 basis points. I doubt it'd be at 50 basis points. That would be something. Wow. But anyhow, Asian and European stock indices were mixed to lower overnight. The US stock indices are pointed toward firmer openings when the New York session begins in about an hour and 15 minutes from this recording. All right, so take a look at the chart. NASDAQ in front of us. It's a daily candle chart stick. Our resistance level is being met, being violated. So I shall rise that and bring that puppy. Let's just bring that puppy up. Let's see, to 18,900-ish. And let's bring our support, sorry about that, to yesterday's lower wick. So again, let's see if we're continuing to move higher. So we have higher high, higher low, higher high, higher low. Let's see. Going with the momentum, buying S&P 500-ish. So yesterday we spoke about the S&P 500 reaching about 5,500, which is basically way up here. Now, yesterday we didn't have that much of fluctuation. I mean, we did because initially the market dropped, but it quickly retrieved and recovered. So again, I am going to leave that 5,333 resistance, and that other resistance line, the second resistance line, is that high where we should be coming aware. If we happen to fluctuate above that, will 5,500 be near? Because as I did say yesterday, that 5,500 could be met by the end of the month. Oh boy. Let's see. All right, Dow Jones actually yesterday, it did recover. It did make a nice move to the upside after obviously tanking. So, but it was still within yesterday's. We saw like Monday's range, but today is looking to continue that momentum to the upside. So let's go with the momentum. Let's buy. Be careful, obviously it could turn around and drop like a cold ice bucket. And then crude oil. So has crude oil bottom? We did fluctuate as low as 72.46. We are recovering. So can we say that it is a good momentum to the upside? The RSI had peaked below into the oversold territory. So this could probably be a good scenario for those who want to be aggressive in buying crude oil. Nat Gas yesterday, it did a lower trending. At the beginning, it did trend higher, but it quickly retreated. We opened with a small gap up. It has not been closed per se, but the momentum could be obviously still on Nat Gas side. So at least let's see if we reach back yesterday's opening of 260 with this particular move to the upside. Gold. Well, gold whenever it loads. We actually have seen gold staying, just trading within range. It's not doing precisely equal highs and equal lows. It's doing equal lows, but not equal highs. But however, this is also telling me that the market is looking to stay within pivot point around the 23,000, 2,350 around that level. So it's still. Let's see if it recovers and it shines some more and fluctuates to the upside. So buying gold could be a probable trade. Silver. Now I want silver to recover from here. It didn't reach that $29 support level that we placed yesterday. So let's see if today can be at least come up to the middle or above $30. Copper is the one that is basically on our support level that we placed yesterday. Let's see when it comes. Okay, here we are. So it has rebounded off this the support level. So I did say that if it rebounds off this support level, we could probably see a recovery. So let's see if that recovery will be at least to 460. So buying copper in the morning. Bitcoin has finally made a good movement to the upside, and it is trading above 70,000. That our resistance level, which is now support, but obviously we're gonna raise our resistance, and I am gonna bring this puppy to 72,717, or 72,700, and our support is gonna be 69,000. So let's see if as it gradually trades higher. It has done a nice breakout. So let's see. The currencies, the euro actually is sort of kind of Here's some of those gains that it did yesterday, that it fluctuated yesterday. So it reached at 109 and it quickly retreated, and so it's trending lower now. So let's see if our 9-day moving average will act as a dynamic support level for it. If it does continue to move lower, or will it just move higher? Right now, I'm just going to say that it is going to be choppy, and it's just going to stay here trading sideways, waiting for that ECB decision from tomorrow. Now, the pound. Let's see the pound, what the pound can be doing. And it is it did open with a gap down. It has been closed. So again, also 128 initially could be resistance for it internally. And then our US dollar index, let's see if it will continue with this movement to the downside, or will it just stay and linger around, the between this channel is creating kind of sort of like, but I'm thinking that it's just going to stay floating around the 104 level. Okay, that's it for me today. Have a great trading day, and I'll see you tomorrow.